On December 9th, 2025, something happened that will end the dollar as you know it. 9 countries launched a currency that does not need America. Not a rumor, not a theory. A functioning pilot currency backed by 40% physical gold. If you have a 401k or savings in dollars, this is a countdown to your wealth being cut in half. The unit went live and Wall Street went silent. Media distracted you with political theater while the foundation of your retirement cracked. This is not like Euro launch or digital yuan experiments. This is the Bretton Woods collapse in reverse. And if you do not understand what that means, you need to hear this now. August 15th, 1971, President Nixon walks into Oval Office with a choice. Foreign countries lined up demanding gold for their dollars. America promised $35 equals 1 ounce of gold. That was the deal, the trust. The foundation of global trade since World War II ended. But America printed more dollars than it had gold. Way more. Nixon had 2 options: honor the promise and drain Fort Knox to zero, or break the promise and close the gold window. He chose break. That night he went on TV and told the world dollars are no longer backed by anything. Just trust us. No gold, no silver, no assets, pure faith in government. Temporary measure, he said. 55 years later, we are still on that temporary measure. Every dollar in your bank account is a promise with no collateral. Now imagine you are a country holding trillions of those promises. You watched America print $8 trillion in 2 years during COVID. You see inflation eating your reserves. You see sanctions freezing Russian dollars overnight. Political weapon. And you realize dollar is not neutral money anymore. It is a control system. So you look for exit. BRICS found it. Brazil, Russia, India, China, South Africa, plus Egypt, Ethiopia, Iran, UAE. They built the unit, not to attack dollar, to survive without it. Here is how it works. 40% backed by physical gold you can actually hold. Not paper gold, not gold certificates, actual metal in vaults. The other 60% is a basket of BRICS currencies. Equal weight, 12% each. Brazilian real, Russian ruble, Indian rupee. Chinese yuan, South African rand. Every day the price updates based on gold rates and currency moves. You cannot print more gold. You cannot sanction it. You cannot freeze it with a phone call from Washington. This is the opposite of what Nixon did in 1971. He took dollar off gold to print unlimited. BRICS put unit on gold to limit printing. Sound money versus fiat trust. And the timing is not random. Gold just hit record highs above $4,700 per ounce this month. Silver hit all-time highs. Central banks bought more gold in 2025 than any year in history. They are exiting dollar system before announcing it. Imagine standing in London, 1944. Bretton Woods Conference. America holds 70% of world gold. Every country agrees dollar is world currency backed by that gold. America wins. Global reserve status, print dollars. World takes them. 50 years of dominance. Now stand in Kazan, Russia, October 2024. BRICS Summit. They hold 50% of global gold reserves. They agree unit is their settlement currency backed by that gold. America loses monopoly. This is Bretton Woods too, but America is not invited. The British pound was world reserve currency for 100 years until it was not. It took 1 generation, 1 war, 1 money printing binge. Then dollar replaced it. History does not care about your loyalty to currency. It cares about math. Whoever holds gold and resources makes the rules. BRICS holds the gold. They produce the oil. They mine the lithium. They control supply chains. America depends on. The unit is not about replacing dollar tomorrow. It is about building the exits today so when dollar crashes, they have somewhere to go. And you do not. Here is how the collapse happens in 5 stages. Not theory. Pattern repeating for 3rd time in 100 years. Stage 1 is deficit explosion. America currently owes $38 trillion as of January 2026. That number grew by $2.25 trillion in just the past year. Every single second, the debt clock adds $71,000, not per day, per second. To put that in perspective, your entire lifetime earnings, maybe $2 million if you are lucky. America adds that much debt every 28 seconds. This is not sustainable, and every economist knows it. But here's the kicker. Debt is 122% of GDP now. That means we owe more than our entire economy produces in a year. Last time we hit these levels was World War II. We got out of that by becoming the only industrial power left standing after everyone else got bombed. There is no war to save us this time, just math. And math does not care about American exceptionalism. Interest payments alone will cost $13 trillion over next decade. That is more than we spend on defense, education, and infrastructure combined. We are paying interest on old debt by issuing new debt. Ponzi scheme with a flag. Stage 2 is reserve currency erosion. The dollar's share of global reserves just hit 56.3% in mid-2025, lowest level in 30 years, down from over 70% at turn of century. That is a 15 percentage point collapse. Countries are dumping dollars faster than any time since Bretton Woods ended. China holds dollars, sees America freeze Russian accounts overnight. realizes dollars are political weapon, not neutral money. So China starts trading with Russia in yuan and rubles, no dollars. Brazil trades with China in yuan and real. India buys Russian oil in rupees. Saudi Arabia joins BRICS and discusses pricing oil in non-dollar currencies. This is the petrodollar system cracking in real time. When oil stops pricing in dollars, the demand for dollars collapses. Your grocery bill doubles because import costs explode. Stage 3 is alternative system activation. This is where we are right now. BRICS did not just talk about the unit. They deployed it. 40% gold backing means every unit issued requires physical metal locked in vaults. You cannot fractionally reserve gold. You cannot print it. Russia reports 90% of its BRICS trade now settles in local currencies, not dollars. That was 0% a decade ago. BRICS Pay launches as payment rail bypassing SWIFT. No dollar needed. No American permission required. Settlement happens in seconds, not days. And the network effects are accelerating. More countries join. More trade routes switch. Every transaction that leaves dollar system weakens dollar demand. Supply stays same. Demand drops. Price falls. Your savings lose purchasing power. Not tomorrow. Right now. Today. Every month you hold pure dollars, you lose to inflation and devaluation. Stage 4 is confidence break. This is the tipping point. Happens fast. Happened to British pound in 1967, took 72 hours. Markets realized Britain could not defend peg. Run started. Pound collapsed. Britain went from empire to bailout case in 1 generation. Dollar is approaching same cliff. Moody's downgraded U.S. credit rating in May 2025, citing unsustainable debt trajectory. That was the warning shot. When Treasury auctions start failing because nobody wants to buy bonds yielding 4%, while inflation runs 7%, the dam breaks. Fed has 2 choices. Let rates spike and crash the economy. Or print money to buy the bonds themselves. Monetizing debt. Weimar Germany playbook. Either way, your 401k gets destroyed. Stocks crash in option 1. Inflation destroys purchasing power in option 2. You lose both ways. Stage 5 is hyperinflation spiral. The final stage, government cannot cut spending. Entitlements are locked in. Defense spending untouchable. Interest payments mandatory, so they print. Treasury issues bonds. Fed buys them with created dollars. New dollars enter system. Each one dilutes every dollar you hold. Prices explode. Not 7% inflation. Not 15%. We are talking Weimar levels, Zimbabwe levels. Your retirement account says $500,000. Sounds safe? But that $500,000 buys what $50,000 bought 5 years earlier. You are technically a millionaire, but you cannot afford groceries. This is not decades away. We are in stage 3 right now. The unit activated. BRICS trade bypassing dollars. Treasury adding trillion every 3 months. The mathematics are inevitable. Empires do not collapse because of external enemies. They collapse because they debased their currency and lost trust. Rome, Britain, now America. Same pattern, different names, different years, identical outcome. And here is what makes this different from 2008. In 2008, everyone ran to dollars. Safe haven. America was least dirty shirt and laundry. Today, there is an alternative, the unit, gold-backed, commodity-linked, outside American control. Countries have an exit. In 2008, they had nowhere to go. In 2026, they have BRICS. That changes everything. The speed of collapse will shock you. When confidence breaks, it does not trickle. It floods. So why can the government not just fix this? Why not raise taxes or cut spending or innovate our way out? Because the system is designed to prevent the solution. Federal Reserve announced December 10th, 2025, they are ending quantitative tightening and returning to balance sheet expansion. Translation. Printing starts again. They tried to reduce the balance sheet from 8.93 trillion down to reasonable levels, got it to 6.54 trillion, still 60% larger than before COVID, still 2.44 trillion of fake money sloshing around. And now they are expanding again because the system cannot survive without constant injections. This is the addiction. Once you start printing, you cannot stop without causing withdrawal. Markets crash, banks fail, unemployment spikes, politicians lose elections, so they choose print. Every single time. Your dollar becomes the sacrifice. And here is the part that will destroy your retirement. FDIC insures $250,000 per depositor per bank. Sounds safe until you realize FDIC has $128 billion in its fund. Total bank deposits in America are $18 trillion. That means FDIC covers less than 1% of total deposits. If 3 major banks fail simultaneously, the fund is gone. Your money over $250K vanishes. Under $250K, you wait months, maybe years for payout while inflation eats it. This is not protection. This is illusion of safety. Here is what you do right now. Not next month. Not after checking with your financial advisor who is paid to keep you in the system. Today. Step 1. Understand you cannot print silver. The entire argument for BRICS unit comes down to this. Gold and silver are finite. 5,000 years of human history prove when paper money fails, hard assets survive. Rome, Britain, Weimar, Venezuela, Zimbabwe. Same pattern. Silver wins. Step 2. Buy physical silver now, not ETFs, not certificates, not shares in mining companies, physical coins and bars you can hold. Analysts predict silver hitting $100 per ounce in 2026. Peter Schiff says 100 is floor, not ceiling. Robert Kiyosaki predicts $200. Mike Maloney says potential spike toward quadruple digits, meaning 1,000 plus per ounce. Even conservative forecasts show $70 to $80 range as baseline. Silver closed 2025 around $72, currently trading at all-time highs. Industrial demand from solar panels and EVs is not slowing. Supply deficit continues throughout 2026, according to Fitch BMI. Every ounce you buy today at $72 could be $100 by end of year. That is 38% return minimum. Step 3, storage matters. And do not store in bank-safe deposit box. Banks can freeze access during crisis. Happened in Greece 2015. Happened in Cyprus 2013. Home safe bolted to foundation. Or private vault outside banking system. You need to control access, not an institution that can lock you out. Step 4, open Treasury direct account. This is direct U.S. government platform. Buy Treasury bonds directly. No middleman. Requires Social Security number, U.S. address, and bank account. Takes 10 minutes. Diversify some holdings into short-term treasuries, not because they are safe from inflation, but because they are liquid and outside commercial bank risk. Step 5, spread your banks. FDIC covers $250K per bank. Have accounts at 3 different banks. Keeps you under limits. If one fails, the other is still accessible. Do this today, not during the panic.